Let's analyze Nvidia stock. There are very important developments happening and we can see significant sales. In fact, I have already talked about this in this video. You can watch it. I have been predicting the inevitable collapse of all these semiconductor companies and the end of the AI boom. It's gradually happening, but I want to draw your attention to the large volumes concentrated at these levels, as well as the volume at the 100 level, which we are unlikely to overcome. Let's analyze this in more detail. We will also look at the entire semiconductor index to see what's happening there. And the most interesting stock today is AMD. Why? Because it has an earnings report coming out literally today. Today we will learn what the future holds for the semiconductor sector. It is clear that it is not doing very well. Before such an important event, if AMD performs well, we might start seeing a recovery. So let's start from the beginning with Nvidia stock. As we can see, after incredible growth, the stock has fallen by 25%. This is not very significant yet, as the company was clearly overvalued. If we go down to 100 and then to $50, I also predicted this. Check out my previous videos. Now let's look at the most important aspect, volatility. As we can see, there has been an incredible rise in volatility, especially at the nearest strikes. This is normal. The closer we get to the expiration date and strikes, the higher the volatility. The nearest expiration date is August 2nd, and the volatility has risen to 91%. Selling options is very profitable right now, but also very risky. I would not advise you to do this. We also see rising volatility at other strikes. The situation is quite normal. Stocks are starting to fall, especially with earnings reports coming soon. The reporting season has already started, and because of this, volatility is also increasing. Now let's look at the volatility smile. As we can see, the volatility smile is mostly skewed towards put options, meaning towards a decline in the stock. Investors and traders are anticipating a gradual decline in the stock. This situation is not surprising to me because it is clear that the AI bubble has burst a bit. If the stock falls to around $80, it would be more or less reasonable. Returning to the volatility smile, investors and traders are buying put options for hedging, and therefore put options are more expensive than call options. This is a normal situation. Now let's look at historical and implied volatility. The gray line represents historical volatility, while the white line represents implied volatility. At the moment, implied volatility is higher than its historical values. This is generally a normal and adequate situation because volatility is rising, and such a situation is quite natural. Now let's look at support and resistance levels to understand what's happening here. We see a massive level concentrated at $110, $115, and $120. These are call options. In fact, we overcame these levels today, so the huge wall of resistance has been breached. So what's our next stop? The next stop is the $100 level. Here, put options come into play. While there were call options at higher levels, put options provide real support. This range won't be easily overcome. However, based on my experience, we see a gap between the price and the lack of volumes here. Experienced investors will look at the options and derivatives market and see that this is an impenetrable resistance. Thus, I believe that sooner or later we may drop to $100, and this will be a significant retracement. How far we will bounce back is hard to say because the market will reassess, and we will need to take a closer look at the options and derivatives market to understand new support and resistance levels, which will be different. Currently, a bounce back to $110 might happen. But remember, the market changes every day, and volumes change too, so this needs to be monitored closely. I will keep an eye on it and will definitely update you on what's happening. Now, let's look at market forecasts. First, let's look at mid-August, which is 2 weeks away. The market predicts a price around $104, $106. This price remains unchanged, meaning the market expects little movement in the near term. If we look at mid-September, the market shows a decrease to a range of $98, $102. This indicates a gradual decline. Finally, by the end of the year, the market predicts a price of $90. I have mentioned this before in June and July, that this could eventually happen. Again, if a recession starts, which I expect by the end of the year, Nvidia stock could easily fall to $50. Friends, this is absolutely normal. If things get really bad, we should drop to $30 and close this gap. In fact, there's another gap lower, around $20. This is not surprising and could happen. I can fully anticipate this in sharp liquidations when banks collapse, possibly BlackRock will be questioned, when margin calls and sell-offs occur, and when the next Lehman Brothers collapses, we could plummet to $20. When this happens, I will definitely include a clip of this video because based on experience with derivatives, options, and the volatility smile, which is adequately directed towards $25, such a scenario is possible. Now let's look at AMD and what's happening with this stock. Remember, the earnings report is today, so we'll be watching closely. As we can see, AMD has fallen by 30% in the past 2 weeks. Let's quickly look at AMD's volatility. We can see that volatility is off the charts, exceeding 115%, which is naturally related to today's earnings report. Quickly moving to trading volumes, there's no need to show everything else. We have surpassed $150, and the next volumes are at $140. We have also surpassed $140. This creates an unusual situation where there are no resistances or supports left. At the levels of $125 and $120, there are put options. As we see, the volume here isn't particularly large, but it could still provide some support. Thus, after the report, if things go poorly, the stock could drop to $120, $125. We will keep an eye on this. Let's also look at SMH, the semiconductor index, to see what's happening here. The semiconductor index has fallen 20% from its historical high in just a few weeks. This is due to the decline in semiconductor stocks. Volatility here is also rising, reaching 50 to 55% for near-term expirations. For an index, especially one that includes many stocks, this is significant. Let me remind you of the components and proportions in this index. As we see, Nvidia makes up 20% and TSMC accounts for 13%. Nvidia's 20% concentration is a significant skew. Next is Broadcom with 7.5%, followed by AMD. The rest are 4% and 3%, which are less significant. This is the composition of the SMH index. Let's take a closer look at the increasing volatility. The volatility smile is significantly skewed towards the downside, indicating a potential drop and a preference for put options. Investors and traders are anticipating a possible decline, and this is likely to happen. Now let's examine the trading volumes. We see that trading volumes are concentrated at the $135 level, but we have surpassed these volumes, and the most significant level is at $210. This suggests a potential for further decline, and $210 will likely be a strong resistance. It's important to note that I do not predict price movements. My main task is to manage the portfolio wisely. Please don't judge me if my predictions are not accurate. I simply analyze the derivatives market and indicate what might happen. I base my profitability on mathematical expectations considering the risk-to-reward ratio. Currently, buying Nvidia stock at $140 or $105, in my opinion, is not a good risk-reward decision. I'm not saying the stock can't rise, it certainly can, but I wouldn't buy it right now. The decline may continue, and it could potentially drop by at least 50%. The key question is whether we have reached the historical maximum for Nvidia. Everyone knows that the growth of these semiconductor companies was partly driven by artificial intelligence. However, I want to emphasize that I'm not advising anyone to sell or short these companies. Do not take this as financial advice. Looking back, we had similar hypes in the 2000s with the internet, then Bitcoin, multiverses, virtual realities, and electric cars. There's always some hype driving these trends. As we can see, the electric vehicle boom occurred in the early 2020s, particularly in 2021. During this time, companies like Tesla grew by almost 2,000%. However, the hype has since faded. Now, Tesla is currently at about 50% of its historical highs 3 years later. This stagnation suggests that such companies could remain far from their historical maximums for a long time. I can even show you a company like T, which reached its historical maximum in the 2000s. Now, 25 years later, the company has fallen by 57%. I can guarantee that something similar could happen to Nvidia stock. There's nothing unusual or unexpected about this. The hype will eventually dissipate. I understand that back in the 2000s, many people claimed that T was the future, just as people are currently shouting about artificial intelligence. However, there are already many articles indicating that AI isn't generating significant profits for companies. If that's the case, companies will gradually reduce their investments related to AI, which could lead to a deflation of the AI bubble. So has Nvidia reached its historical maximum? It's hard to say definitively. I can suggest that it has either already done so or will do so very soon. We might see a bounce back to $150, $160, and then we could be on a long-term downward trajectory. Again, this is just my opinion. I'm not urging anyone to panic or take drastic action. It's essential to understand that you shouldn't risk more than 10% of your capital in a single stock because it's quite risky. You can genuinely lose a significant amount of money. While there may be short-term rebounds, I still believe that the stock could decline even further in the long run. If you have any questions, feel free to write them in the comments, and I'll do my best to respond. Also, I want to remind you that I'm currently running an experiment where I'm trading and showing my portfolio, so make sure to check out this video. Good luck to everyone.